Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. And Rick Ducat will take us through the charts. Here to take us through the trades, Joe Tigay, portfolio manager of the Rational Equity Armor Fund. Great to see you both. The selling continues, in a big way here Monday and Tuesday. We're kicking off a new quarter with a lot of down arrows, Joe. What say you?
Yeah, interesting data in the morning. More signs the economy continues to be resilient. Job openings was better than expected. Factory orders looking strong too. So just a sign the economy is better than expected. Initially, the market's looking at maybe we won't get the 3 cuts the Fed has said they had. The market's been off on the amount of cuts the Fed has said that they're going to do. The Fed's been consistent. They've been saying 3 cuts. Earlier in the year, the market expected 6+. Now the Fed still is at 3. Now the market's saying, hey, maybe we don't even need 3. But we'll have to wait and see how that actually plays out. But it's interesting, ahead of this week, we had gold really taking off. People expecting those 3 cuts, expecting that inflation trade to get back on. So fascinating to watch it at where we're standing right here.
All right. So that being said here, your thoughts on your first trade? I know you're looking, and some of these are going farther out. You have Apple here today. It's around 168. Where do you think it's headed and why?
Yeah, actually, all of my trades, I'm looking through to September. I'm thinking the market will rally in this election year up until September. I want to be out of the market in the middle of the October surprises and, of course, the election time period. So just looking through September, I'm thinking the Fed's going to stick with their 3 cuts. I actually came on here and I was bearish Apple. I bought the 180 put spread about a month ago in Apple. And now that we have fell off quite a bit, I'm actually turning it around and saying, I want to get in here on Apple down here below 170.
Okay, so, but you have some time for this, to your point, waiting to see some sort of rally. Rick, your thoughts on the chart, please.
I think we're at a crucial point on our chart today in this name here because, as you can see, we did have this lengthy slide downward here. We've got this downward sloping trend line in white. We did have a bit of an upside excursion there, looking like we were going to possibly break out, taking out our 2 moving averages, our yellow 21-day and purple 252-day, and topping out near just below 179. But the move then faltered. We retreated back within the boundaries of that trend line here. Now we're finding ourselves in a position where we're just touching on our previous low point that we reached from late February, early March, right around 168.50 or so. So this looks like a key area to hold today. If we can hang on and start to right the ship and move back to the upside here, we've got to take out our downward sloping trend line first here. Then we've got our volume profile point of control and our yellow 21-day EMA to take out as well. Those come in around 172 to 173 or so. So if we were to take a look at our RSI next, our momentum indicator, we can see that we are trending upward a bit here. We made our way out of that oversold area, but we are still bearish in terms of our tilt here. We're below that 50 midline. We couldn't quite make it above that 50 midline during our last foray to the upside here. So in terms of support and resistance, as I said here, 168.49 was our previous low that we did slip below today, but recovered here. Now we're not seeing a lot of net movement from the open here. So keep an eye on this one as we head into the close, because if we fall below that level, that opens the door to those previous lows here, all the way from back in October near 165.67. If we make it to the upside, the ultimate point we'd really want to beat here would be this area near 178.67. Those highs that we reached from when I previously mentioned that we looked like we were going to break out of our trend line, but ultimately faltered. We would want to take out those previous highs.
Yeah, all right, so we'll watch those levels even going into the close today. And in a bit, we'll be speaking with Melissa Armo, who's on the other side of this trade. She's probably, chomping at the bit, listening to maybe a longer trade here, Joe.
Yeah, I agree with all of that. It looks very precarious right here, but we are at an area which has been resistance in the past, this 165 to 170 area. It's been a spot where where Apple turned around previously, was able to break through there. I think it's great that it's holding here, but it's good to use options to put on a trade. And by the way, Apple's being hit, they got the regulatory issues, they got weak sales in China, and I think it's behind the game in AI. And I don't necessarily view that as a huge problem for Apple. Apple has a history of being behind the game in new technologies, but just coming out with the right product at the right time when the technology is advanced enough. And they have a way of engineering a product that's easy to use for its users, and they have an ecosystem of customers that are just loyal to it. So when they do come out with the AI product, when they do have it, that iPhone will just become much more necessary for people to own and really justify the very high prices that people are willing to pay for their iPhone. So I'm looking out in September, just looking at the 165-200 call spread. Don't need it to race too much past 200. I can collect some nice premium on that. It's already a little in the money here for me. This morning it was $12.80, so that's what I'm risking on Apple. Not going to be risking the full $170, just at $12.80 to play it through September.
All right, and look, you have some time for that because you did have at least one analyst saying the risk about the unit shipments of the iPhone simply being a little too soft and some concern there. So we'll continue to watch how that story goes. And the next up, we have Taiwan Semi, which has been a winner year to date, up almost 35%. Your thoughts here? Is that right? That can't be right. Let me double check that. But anyhow, tell me your thoughts.
It's had a tremendous run since October too. It's up close, up from $70 some to where we are now, around $140. So it's been a tremendous run, but it's still lagging behind Nvidia, and I think it's lagging only because of the rumors with China and Taiwan. I don't think that's a really good reason not to own this stock. I think it's going to be getting into the most accelerated chips, the most advanced chips, the 3 nanometers, the 2 nanometer chips. So they're investing mega bucks, like 30 to 40 billion in these new factories. So I am with them for the long haul. I think they can catch up to Nvidia if there is going to be a semiconductor stock to do it. I like them, and I do think they potentially could have that type of a quarter, type of a year that Nvidia has had the next couple quarters.
Look, they've seen overall strength in chip and memory, and overall they came up as high as 158, pulled back for this stock. Your thoughts on Taiwan Semi, which is at 140 today, Rick?
Yeah, we are up about 35% or so since the start of 2024. And really, the chart took a turn to the upside here during our last earnings event. We had a nice gap upward here that propelled us up into those 52-week highs near 158. However, we did break through this upward sloping trend line here. We had a test to the downside, but we recovered and then ultimately did fall to the downside once again. We dipped below our 21-day EMA twice within the past couple weeks. Then yesterday, we retested that trend line. We were not able to make our way back above it, though. So old support became new resistance, a common adage in trading. It held up this time. Now today, we're on pace for what's called a harami candle. And, we've still got a lot of time left in this trading day, so that could change. But when I say a harami, I mean the real body of the previous day's candle, the distance between the open and the close, completely encompasses today's real body. So it's the opposite of an engulfing candle. It speaks to more indecision and perhaps an interruption in trend here. So we can also see when we look at our RSI, we've been trending downward. Momentum has been kind of trailing off as we have been progressing during the past couple of months here. We are still above that 50 midline, but no, not even close to our overbought area once again. That's really what the bulls would want to see, would be a break above our previous highs on the RSI and a break back above that trend line. That would be a good situation for the bulls. Nevertheless, we're above all three of our moving averages. All three moving averages are trending upward here. We're still up. Notably, we're up 73% from those yearly intraday lows. So a lot to consider with this name here. And in terms of support and resistance, the area that we really want to take out would be our best close on the year so far, which was 149.20. That would be still a ways to go from the intraday highs, but that was our best close. That would be noteworthy if we were to take it out. Our 21-day EMA could be supportive right around 137.43, and then we've got this area here, our old highs and then our lows near 134. That could be supportive.
Okay, thank you for all of that and some great explanations too. And so final thoughts here, Joe, on this one on Taiwan Semi.
Yeah, some great thoughts, and that candle looks like maybe consolidation panel. We'll have to wait and see, of course. But yeah, it does make sense that we will consolidate these levels. Ultimately, I think that is good news for the bulls. If Apple can consolidate here too, that'd be good for the bulls. If same with Taiwan Semi, if we can get some consolidation here at these higher levels, that'd be great for the bulls. So I'm comfortable with that, but I don't have a lot of conviction on the timing. That's why I'm looking out again until September on my trade. We're looking at the 140, 160 call spread. Another call spread gives me a lot of time, lets it play out. Right now it's $7.40. I'd love that to turn into the full $20, get a 2-to-1 payout on my money on Taiwan Semi.
All right. Next up, TD Cowen maintains a buy on Exxon. They put a 120 price target yesterday, so still liking this one. It's at 118 today. Where do you think this is headed and why?
Yeah, I think it's going to new all-time highs. I think, there's been a lot of money flowing into metals, a lot of money flowing into gold, obviously chasing the Bitcoin gains. But that's been the inflation trade ahead of this potential Fed rate cut cycle. That's something that we see time and again. But people kind of forget, oil also does the same thing. And at the end of the day, if the people would really buy what they need, not what they want. So people are always going to need oil. And I think it's got a couple of things working for it. Let's say the Fed decides ultimately the economy is too hot to cut rates. That will still be good for oil because there'll be demand for the oil. And of course, if they do decide to cut, the inflation trade will be there. And if they cut while the economy's hot, well, that'll just be double good for oil.
Right. Okay. And look, the 120 price target that they have is really the recent high, 120 and change. It was that high that we saw back in September. Rick, your thoughts on the technicals here?
Really a strong move recently. We're on pace for today. 18 of the past 20 days, including today, are green. Only 2 red candles during the past 20 days. So really a strong move upward in this name here, traveling within a rather narrow, rather tight upward channel between our 2 white dashed lines, even testing it to an upside breakout today, although we have retreated back within the boundaries of this channel. We're above all of our moving averages. Once again, they're all trending upward. You can see our closest moving average all the way down here near 112. So significantly outpacing these somewhat lagging indicators that we follow here. RSI also looking quite strong. We are above the 80 mark here. 70 is overbought. 80 is quite a high reading because RSI only goes from 0 to 100. So there's a limit on how high it can go. This suggests strength in a trending market here. So momentum is on the side of the bulls. Our trend is on the side of the bulls as well here. However, as you said, Nicole, that 120 mark that they mentioned, those are the highs that we reached on the year here, 120.70. So that we've got kind of a double top to contend with that we didn't quite reach just yet here. Also consider that in addition to that, we have our +3 standard deviation channel coming in just above 120. By that, I mean we have our linear regression line, our blue line here, our line of best fit, 3 standard deviations above that point. That would be a relatively extreme reading for this stock based on our own price history here. So that could be a resistance point to keep an eye on. For support, the +2 channel right here, this orange line comes in near 115, also matches up with a nice little volume node there. Just below that as well, 114, this green line, frequent stopping point for price here. You can see that we had gaps down that began there, then topped out there, and then a little consolidation around this area. So 115, 114 to the downside, 120 is 121 to the upside could be important.
All right. Thank you for all of that. And we'll give you the final word, Joe Tigay. This, as oil has, really been pushing up against 5-month highs, roughly. Your final thoughts here.
Yeah, so I got 3 trades, all of them looking out into September. I believe in this secular bull run that we're having. Now we might have some trip ups along the way. We might pull back along the way. That's why I want to have some time on this. I think actually short term, I think some consolidation is in order for all three of these names, but I do think we'll be significantly higher by September. I'm just looking at Exxon Mobil, the 115, 135 call spread, another $20 call spread getting on for about 775. Another trade where I'd love to double my money if we do reach my 130 target here.
All right. Thank you both so much for the big three today. Great names: Apple, Taiwan Semi, and Exxon Mobil. Joe Tigay, Rational Equity Armor Fund, and our own Rick Ducat there on the charts. Thank you.